please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. You're with us here on a fresh new edition of Midcap Radar. I'm Prashant Nair. With me is my colleague Sumaira Abdi. The markets are bouncing, and it's good to see that they're bouncing because we've had a terrible last few days, not just for markets here but around the world. And now we are actually up all of 16 points, but boy, doesn't it feel good. You know, the low today was 9,958. We're at 10,015. So it's no great shakes. It's what, 30-point recovery from the lows of the day. But it's just good to see some green, is all I'm saying. You know, US futures are bouncing, and you look at US yields, they've also bounced a little bit, I mean, from the 2.8 odd kind of levels. So generally speaking, there is some buoyancy. US also had a pretty terrible week for bulls, the last one. So maybe as we start this week, things will be a little bit better at the margin. That's all that I'm talking about. At the margin, things are a little bit better. So, good afternoon.
Hi, Prashant. Good afternoon. You know, to call it a bad week is quite an understatement because they started Monday on the highs and they ended Friday on the lows. But interestingly and encouragingly, Europe, I think, has opened with some amount of gains. So in Asia as well, we've seen a pretty, quite a tough session actually of trade. But Europe has opened up, I think, on a good footing. We have Christine Lagarde's speech that is due very soon in Europe around 9 a.m.
Touch base on some individual stories in a bit. Flashes at the bottom of the screen. So this is Adani and Neyveli lignite. You know, it's not as much helping Adani, but it is pushing Neyveli down. Or was Neyveli already down 4-5%? But I just saw it was being lower. 2.37% higher on Adani Enterprises and Neyveli slower. The news is this: Adani has signed, an arm of Adani, a unit of Adani, has signed a coal mining agreement with Neyveli Lignite for certain mines. Development of Talavera 2 and 3 expected to generate revenues of 12,200. We don't know what the revenue sharing, etc. is, but it's just coming in right now. We'll try and get you more details on what exactly are the contours of this particular agreement. Ashwani is with us, as always, on the top of the show, so let's bring him in. Ashwani, thanks very much. 30 points on the Nifty. What's your sense whether this will last or another opportunity to sell?
See, this bounce looks like a bit more sustainable than the others we've seen so far. 99.50 was something I mentioned on Friday. That's held on today. Plus you have an all-time high FII short position. Plus there are reports that Chinese, Americans, etc. are negotiating. And plus you have a 200-point Dow futures higher. So that makes a nice cocktail based on which we can go up and possibly could test the 200-day moving average from the downside this time, 10,150, 10,200. So since the first port of call is now crossed, which was about 10,040, 10,050 Friday's high on the Nifty futures, I think another 100 points can happen. In terms of a pullback, I think you could have a fairly strong pullback in the next couple of hours because, once short covering starts and shorts start to see that things are sustaining, it tends to pick up steam in the last couple of hours. As far as individual stocks are concerned, you need to be in stocks where the most amount of shorts may be there. So Yes Bank is a buy with a stop of 294, target of 310. Canara Bank is a buy with a stop of 250, target of 265. And BoB is a buy with a stop of 134, target of 148.
Okay, Ashwani, thanks very much. We'll touch base in a little bit from now. But as Ashwani was pointing out, Sumaira, we got 40 points now. I mean, we started with a 20-point gain. We got another 20 coming through. Very, very sharp pull coming through on the way higher right now. 10,035.
All right, so let's get in then some market opinion. This morning, we caught up with Sridhar Shivaram of Inam Holdings, who says that macros remain a concern for India, while the micros have improved and that 2018, like a lot of people have been saying, will be a tough year to be an equity investor.
In general, our belief is 18 is a tough year and not to expect too much of returns. In fact, we are currently underperforming the emerging markets by almost 10%. and as long as we hold some range in the market somewhere in this range, say plus minus 5 or 10%, that should be a good outcome. Keep in mind that we still have many uncertain events ahead. We have a e-way bill which is starting from 1st April, which a lot of people tell me is slightly disruptive. And then we have some elections which are coming. So if I put all those things together, this looks like a tough year, and protecting capital will be my paramount objective right now. India's macro has significantly deteriorated. So if we go back, say, 3 years to where we are now, we are seeing inflation inching up, even though it is still within the RBI band. We are seeing our current account deficit moving up, and also we are seeing interest rates from RBI signaling is moving up. India's some of the best bull markets have come when our macro hasn't been great. So India is really a micro story. And if I look at the micros, I'm seeing some of the micros really improving. So you look at CVs, or you look at tractors, or you look at two-wheelers. Generally, the numbers that we are seeing, we are seeing much more positive numbers as far as micro is concerned, whereas macro is deteriorating.
All right, let's take a quick break. Up next, we'll get chatting with the management of Take Solutions. There's a recent brokerage report which is quite bullish on the company. Market's looking good, so about 0.5% higher on the frontline indices. The Sensex is up 200. So let's take stock of what some of the companies are doing. Take Solutions is a stock that's on our radar. It's not had a great start to 2018, but a recent brokerage note suggests that investors are quite upbeat about the prospects of the company capturing a bigger share of the life sciences drug discovery spending. Srinivasan HR, the Vice Chairman and MD, now joins us on the telephone line. Mr. Srinivasan, good afternoon. Thanks very much for speaking with us. So this whole repositioning that this brokerage seems to be talking about, it looks to be working. I believe life sciences is now showing what, a 25% top line growth. How much more have you targeted? I mean, what's the total pie that you're looking at?
See, the life sciences R&D services business, that it's a fairly large market at about $35 to $40 billion. And at the moment, for the first 9 months of the year, in dollar terms, we've grown our life science business at 30%, and in rupee terms at about 25%. We have a very healthy order book, which for the life sciences business alone stands at about $151 million. And we expect this growth trend to continue over the next several quarters. So on the life sciences business, certainly the company feels very buoyant that we are in the right space, have the right credentials and capabilities.
So what is the difference in business between US and Europe in terms of, what the contribution is? I ask because I believe the margins in the US are higher.
Yeah, traditionally, it is not only for our business. In most businesses, you will find that the margins in the US are higher. There is a value pay that happens in the US. And the buying environment in EU is a bit conservative. And you can have as much as 5 to 7% difference on the same services on the margin front.
Is that why you're looking also at some acquisition in the US? I mean, can you tell us what's the update?
Yeah, see, the US acquisition, we are looking because we want to enhance or strengthen a clinical footprint in the US. Currently, we have only the regulatory and the safety footprint. And clinical is the largest piece, so we want to enhance that. And we're looking at acquisitions in the US. Traditionally, the US market is the largest pharma R&D market. So it's very important that we are present there. And even geographically, 81% of our revenues come from the US. So we are a fairly US-centric company. We just want to be strengthening our clinical presence, and we're looking at doing that through an acquisition.
Okay. So what is the update in terms of the fund utilization from your recent preferential allotment?
Yeah, well, the issue got done just last week. So we are keeping this for doing the acquisition, and that's the intention of the fund.
The entire 250 crores, right? Any debt on your books?
See, our net debt is about 0.1 to equity. So, and we are leveraged outside of India, so we don't have any rupee borrowings as such. They're dollar-denominated borrowings and paid for by operating margins.
Right. Mr. Srinivasan, hi. Good afternoon, Prashant here. You know, if I look at the stock, the Tech Solution stock, I mean, it's basically, it's doing well on the day-to-day, but it's at the same level it was 3 years back. We've had a big bull market and all kinds of businesses have been re-rated, especially smaller companies. What is in a way, I mean, how do I put it? I mean, I know you run the business and not the stock, but is there something which, according to you and your understanding, is worrying investors? One a concern which the broker, which we're referring to, highlights as high receivable days and things like that. I mean, cash conversion seems to be a problem. Could you talk about that?
Yeah, first, of course, I don't track it on a 3-year basis on where we are doing on the stock. And like you rightly said, our job is to run a very efficient business. And on all parameters, we have been efficient. Now, before I come to the, I just want to maybe give a clarification on the receivable days. We reflect the pharma industry receivable days. So whatever is the pharma industry average, I think we are very much there. So it can't be that one portion of the pharma industry alone shows different receivable days. The key issue on our communication to investors, and we're putting in a lot of effort to doing that, is ours is not a business that can be easily understood, because you need to understand the pharma R&D life cycle. So many times we are perceived as an IT company, which we are not. We actually do core clinical research, we do regulatory submissions, we do safety monitoring. So we do very high-end work with medical science. So it is at the confluence of medical science and technology. And I think we need to message that a little more effectively.
Right. Just one quick point. What is the split now between clinical research and the other stuff? I think, I mean, this was 3 or 4 years back. Back then, clinical research was not that big a portion of your revenues. Yes.
So today, in the last quarter, 89% of our revenues came from the life sciences vertical and 11% from the supply chain. And we believe that we'll be able to sell the supply chain business very soon. So our intention is to be a full life sciences company. And I think that would impart a lot more clarity to...
Sure. No, I meant within life sciences, what kind of work? I mean, if you could give us that split.
Yeah, so on the clinical side, currently we do about 40% of our work on the clinical side, 40% on the regulatory, and 20% on safety. But as we move ahead, you'll find the clinical side becoming much stronger. It may tend towards 60-70% over the next 3 years.
Fair enough. Mr. Srinivasan, thanks very much. Appreciate you joining us with that, with those comments, and look forward to speaking with you again. So that is Tech Solutions. Stock's up today, about 6% 6.5 actually, 163, 164. So 63 points on the Nifty. I mean, while we were on the break, the Nifty did go up 70 points. So we've come off a little bit, just a little bit or so. As I said, we'll try and speak with KEC in a bit. But what we're going to do is get you some more corporate opinion. We earlier spoke with Madhu Nair of Cochin Shipyard about the company's growth prospects in FY19. The conversation was centered around the important ship repair segment for them. Listen in.
The business momentum is looking strongest in the ship repair area. Ship repair, we do about 80 to 100 vessels a year in our Cochin shipyard operations. And the revenues are almost, last year we had done about 550 crores of turnover out of a total gross turnover of 2,058 crore. That's FY17. And FY18, and that was a record turnover for ship repair, 550 crores. This year we are well poised to do better than that. Getting into FY19, again, we feel over the next few years, let me put it that way, and year-on-year growth of 12 to 14% would be what would be a conservative figure I could actually guide. An order which we have bagged, it's the ASW corvette, the anti-submarine warfare corvette order. That is for 8 vessels, which would be worth about 5,400 crores. It has not yet been converted into a contract. The formalities are going on. Another few months down the line, that would be converted into a contract.
And all right, so that's the word coming in from Cochin Shipyard. Well, the market is looking good. In fact, look at the Sensex. It's now about 330 points higher over there. So it's, Prashant, I think it's just going all guns blazing for now. And also to pull up some of the stocks which are doing well, so like a Hero MotoCorp, all of them now sitting at the highs of trade. ITC, that's a big stock, so that would be doing well as well.
Very, very likely, Sumaira, and this is, I mean, this would be just a hunch. We get the figures at the end of the day, but this would be covering, short covering more than any frenzied buying or anything of that sort. So let's see where this can extend us to, because at some point the covering will end, although I don't think anytime soon, because there has been so much bearishness on one side, as things gotten extended on one side, that maybe just on account of covering, there may be more to go before this peters out. So this is going really fast now, 77 points, which basically means almost, what, 60 points, 85 now. Whoa. This is what, going on jetpack. I mean, 86 points, 10,083, 60, 65 points basically have come in the last 25 odd minutes or so. So this is going pretty good. All
right, so let's quickly touch base with the management of KEC International. They've won some new orders worth almost 2,500 crores. Vimal Kejriwal, the MD and CEO, now joins in. Mr. Kejriwal, good afternoon, sir. So we understand the bulk of this 2,500 crore order is for the T&D business. Could you give us a sense of what this will take the order book to, what the margins are like, the timelines and so on?
So you're right, 70% of these orders are from the T&D and the balance 30% are from the railway sector. Now, this takes my order book to roughly around 17,500 crores. And with a further L1 of around 2,500 crores. Coming to the margins, I think margins are all standard margins in and around 10%.
So this 17,000 crore in terms of your order book is for what, FY18, right?
It's as of today, though. You know, the balance order book.
I understand that. Yeah. Okay, and how much higher is this compared to last year? I mean, how would it compare?
I don't have the exact number, but it would be roughly around 30% higher.
Right, Mr. Kejriwal, so these, what are the majority of these orders in? I mean, this is all T&D, or?
As I said, around 1,600 crores are from the T&D, 1,650 crores are from the T&D, part of it from India and part of it from Afghanistan and Americas. And the balance is composite orders from railways. Okay.
What is the pure EPC, sort of civil EPC work looking like? I mean, has that business started? Have orders started coming in? Have you started? I mean, just some updates, sir.
So on the civil piece, our order intake roughly till today is around, since we started the business, would be around 500 crores. And we do expect a revenue of, let's say, close to 150 crores this year. Going up to next year should be around 500 crores.
Sorry, 150 crores in
150
18?
will be the revenue for FY18.
Right.
And we expect a revenue of around 500 crores in FY19.
And this will be 8-10% margin business?
This would be around that much, yeah.
Okay. Fair enough. Sumaira?
All right. And Mr. Kejriwal, just to wrap it up then, could you give us a sense of how FY18 itself has turned out? What are you hoping to close the year with in terms of a top line, and what's the outlook for FY19?
So FY18, we have been talking about a growth of around 10 to 15%, and I think we are pretty okay with that, because that is after the GST impact. Had the GST impact not been there, probably would have been 5% more than this. FY19, we have been talking about doing between 15 to 20%, and I think with an order book of 17,500, I think we are pretty comfortable that we should be able to achieve that.
Okay, Mr. Kejriwal, thanks very much. Appreciate you joining us with that perspective on KEC. 75 points now, so which means from the day high we're off about 8-10 points, but from 130 we're up 60 points, 55-60 odd points or so. So this is looking pretty good. Absolutely no doubt about that as of now. Maybe we'll just also look at some stocks if we can.
Yeah, I think look at CESC for sure. I mean, on the whole, the stock is up about 6 odd %, and it's pretty close to the highs of the trade. It's added about 2.5% in quick succession in the last, I think, what, half an hour odd. Canara Bank is another stock that actually remains in focus through the day-to-day. So that stock is up about 5.5 odd %.
You know, so on CESC, Nimish sent a mail saying that the NCLT, the demerger process was approved at the NCLT today. So maybe that is the reason why that one is spiking as we speak. So but that's a big move. We should actually try and speak with the management to confirm this and get some more details.